Well, good day, all. Ira Epstein, and here we are with your Thursday evening wrap-up, and this is Spider ETF. Now, the first part of the earnings reports came out very good. We saw more, in my opinion, there were more good things than bad things on an overall basis. Where I was worried was when we were going to start getting to the tech, which is this week, and it's continuing to get worse. Apple, for example, as the conference call went on, it was actually up a few bucks, and then it just let go. It's down about 2.5%. Amazon getting hurt. It's one after the other. You know, Meta, the story there, getting hurt. Look for Twitter, the completion of this deal to happen right away. I can't imagine it not going through. So that market back up to the 53.70 level. But as I'm saying, you've got to be careful here. You've also got to be careful about the euphoria that you're seeing. If you follow me, and you'll notice I'm not in these videos. I'm out of town this week and early next week and then back. But that doesn't mean we can't take a look. You can see what's going on all the way through these. They got hurt. They were up early. Everything came back the other way. And this is part of the fact that you got up to Bollinger Bands and key moving averages. I'm going to repeat. First time you hit those bands, you got to know if you're embedded or not and how to work with your positions. Let's go and take a look first at Freeport and see what's going on here. As we look at the market, you might want to come down and fill a gap in the chart. Do you see this right through here? That is what might be filled on the way back down. But overall, this chart is looking better and better. Let's go to the very next chart. Now, this is the swing line study. And as you can see, you've got a pattern of higher lows, higher highs. That's bullish. The number that you want to be concerned about is not getting under right here. And that would be 30.55. In terms of where the support is, well, if it breaks hard, it starts in at the 200-day, the 50, and the 18. Remember, we had a bullish crossover happen just the other day. You see that right there. I mentioned it. And I wouldn't be surprised if you get the 18 to get over the 200. This is turning out to be a bigger and bigger, better looking chart. It's got to hold those zones if they're attacked, but it's certainly looking better and better in my opinion. But as you heard me say just a moment ago, whenever you get up to Bollinger Bands, the markets generally get thrown back on the first test of them. And this is no case. You got here, you came down to now what would be support since you're over the 100-day average coming up. Notice how the 18 is attacking the 100-day average here. When we add slow stochastics, you have an overbought market. It is not embedded. Not embedded to me means from this buy, the pros came fully out of the market. And I use the word fully. Now I think they wait on pullbacks to see if they come back in. Meta took a beating today, down 25%. The problem there is they are not doing what the investors and the holders of the shares want, which is cutting spending on this meta universe, as they like to call it. They're not seeing the results. Their advertising revenues are down, and the stock is getting creamed, to put it mildly. I would be very, very cautious about this market. Is it a breakout? It could be. I know you're laughing at that. Me too. But when I look at it, all you need is another day down where the market closes in the bottom quarter of the range, and then you look back, you'll be saying, hey, that is the top of the market at 138.25. Well, certainly it is. You're down $40 already, but then you could even get worse events happening. In Apple's down 3.05. As I said, its numbers are not stellar. It has its conference call. It might be ended by now, but its new iPhone, I'm not talking the Pro version I have, the Plus, it's just not selling well. And their other products aren't carrying the end of the day. Advertising to them, I listen to what people say, it's just not a big enough universe for them. Do I like this stock on the long term? I certainly do. I think the company's a great company. Do I think it can pull back more here given its overbought nature? Why not? Do I want you to be long this going into the FOMC meeting next week? Absolutely not. Then we get to Disney, which caught the great run in large part off of Netflix when it had its big pop and it added subscribers. The market coming up here to the Bollinger Band, the 100-day average. Are you embedded? No. So when you got up here, I told traders they can back out of the market. That was 104.36. You're 104.44. You haven't gone anywhere in this little bit of a time frame. I'd be waiting. If it embeds, I'll get bullish. In order to embed, at the end of this video, you'll see my talk about Bollinger Bands, how to work with the enhanced Bollinger Bands, as I call them, how to learn off 13 chapters. That's where you go. Now we look at XLF. This market's been a surprise to me how strong it's been able to come back in the financial services. So I guess what the people are saying is the rates are high enough, the spreads are high enough, that those in this industry don't have to pay out that much. They don't have to on their CDs, and yet interest rates keep climbing on that. So the spread between what they pay out, what they're taking in, good for that industry. In the industrial sector, this has been the good area of the market, not the tech. This has been the better area. We are embedded, as you can see right through here. Therefore, as I look at the market on the pullbacks, the pros I think are going to try to buy this market on a break, and they'll bail if you get a reading under 79. When we go to the semiconductors, they have come back from death. As you know, everybody after Texas Instrument was talking poorly, the market did come back, and it is in an uptrend. Maybe the worst is behind the industry. I don't know. If you're a buyer, the pros might take a look here at 152.89 with stops under 146.55. It's not quite overbought, but it's so close that if you were with me, I would tell you I think we wait and let's see if it can correct a little bit more, because if you buy it and it goes your way, it's instantly overbought. And at the upper band, possibly, be a nice profit, but I'm not saying it has to go there given it's overbought. In the home builders, this is the S&P home builders. You can see this market has surprised people as to what it's doing. It hasn't me. I have told you that you're caught in sideways action of the Bollinger Bands going nowhere. And what often happens in these markets is you spin around, just the way you see my cursor doing it here. What you've done is you've challenged again the 100-day average. I don't look for this market to go very far. It's going to get another piece of very bad news next week when the Fed goes up another 75 basis points. How much higher mortgages can go, I don't know. But sooner rather than later, mortgages will peak out. But that doesn't mean you're the first guy on the block buying these. I just don't buy that at all. Now, we have an embedded reading fully at work here. I thought the kiss of death, and I've got to say that to this market, and it helped this market, the kiss of death to the president, is when President Biden comes out and says, we're going to buy oil at $70 to replenish the strategic reserves. And my first statement was, I didn't know he was a commodity trader. The guys on his energy team don't know what they're doing. And to talk $70, you got to get there. You were, when he said that, $12, $13 away from that. He put a floor under the market. Now, if things start looking better in the world economies, the market moves higher. They have to change their game plan, but I think it's folly, craziness to tell the world where you're going to step in and put a floor. First of all, why do that? You buy when you want to buy, you don't buy, you fool the market. You don't do what they're doing. Just terribly bad business. Again, you get academics, not business people, in and running these things, and you get very bad policies. When you look at GLD, up to the resistance of the 18-day average. Now, I can't imagine any reason that I would tell my clientele to go into the FOMC meeting long gold. It just doesn't make sense. It's had a headwind of higher interest rates for the better part of this year, certainly when the Fed began raising the rates, and it hasn't gone anywhere. Let it prove itself that it can go up when interest rates are going up. Then we have something to talk about. SLV's acting better than gold, but it's up to the key resistance. First off, the market has entered overbought area. Second thing that it's done, you're now fighting the 100 and the 18-day average of closes. While it looks better than gold and it is stronger than gold, again, I don't like buying into that resistance point. In the copper market, I've been telling you regularly that Codelco keeps saying that they're getting lots of questions. Will they go into 3- and 5-year contracts for guaranteed supplies? The market is looking beyond the recession, which number one, I have been saying we're in a recession for probably 3 months or so. But number two, I don't think it'll be a deep recession. I've said that just the way the other economists are for one reason: strong employment. You don't go into a deep recession when people are employed strongly. And that's what we have at this point. Yes, the Fed wants to get the unemployment rolls swelling a little more. They want to see the jobs report fall. But when you're coming off of what we have to call full employment of 3.5% unemployment rate in America, you have room to even go up 4.25, 4.5, and not do the type of damage that would cause, to me at least in my thinking, a massive rout in the market to the downside. When I look at TLT, I have been expecting short covering, and I've mentioned it here regularly in front of the FOMC, and you're getting it. This is what it should do. Let the game get back to that 18-day average and the market figure out what to do. And in the dollar index, okay, basically sideways action that tested yesterday. Can it push itself out of the lower band? The answer came in today. No, you're getting a bit of a bounce in that market. FXE, as you can see, this market higher lows, higher highs, got up to its upper band and thrown right back. That's what you expect. That's what we teach. Take a look at this right now. Learn more for yourself about Bollinger Bands. It's simple. It's 13 chapters of video, then 2 weeks where you spend time with me each morning in my videos, and I reinforce in real time what the markets are doing and how to work with that. I'm Ira Epstein. Thanks for watching.